for its content. Josh Jalinski is the president of Wealth Quarterback LLC, a registered investment advisory firm located in New Jersey. Registration is not an endorsement of the firm or its representatives by securities regulators, nor is it an indication that the advisor has attained a particular level of skill or ability. Investment advisory services may only be provided to clients in jurisdictions in which the firm and its representatives are appropriately registered or exempt from registration. You should not assume that any discussion or information contained in this broadcast serves as the receipt of or as a substitute for personalized investment advice from the advisor. Different types of investments involve varying degrees of risk, and there can be no assurance that the future performance of any specific investment, investment strategy, or product, or any non-investment related content made reference to directly or indirectly in this broadcast will be profitable, equal any corresponding indicated historical performance level or levels, be suitable for your portfolio or individual situation, or prove successful. Past performance is not indicative of future results. Investment advisory services offered through Wealth Quarterback LLC. Tired of losing money in the stock market roller coaster? Frustrated with the government taxing you into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jalinski. Josh is a noted financial advisor and president of the Jalinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now, let's kick off your financial future. Here's Josh Jalinski.
Good morning, America. This is Ernesto Caleri. I am Josh Jalinski's wingman. You're listening to The Financial Quarterback. This is the must-listen-to radio show for all things money, from tax savings, wealth management, retirement planning, and we even throw in a little dose of relevant politics just to keep things interesting. This morning, we are joined by our special guest, Dr. Richard Smith. He is the CEO of the Foundation for the Study of Cycles. And this morning, we're going to ask him about NFTs, all things NFTs, and the surge in cryptocurrency prevalence. Good morning, Dr. Smith. How are you?
Good morning, Ernesto. I'm great. Thanks. Thanks for having me.
So Josh asked me on the show because I'm more or less the man on the street. I don't have a background in finance. That's why, we need this show. America needs this show more than ever so we can become financially literate. But help me out here.
Absolutely.
I struggle to understand NFTs, the value of it, the very concept of it. Why don't you give us a little background on that, please?
Okay, good. So I think that NFTs, I'll get into the background of what they are in a minute, but why I think they're valuable is I think that what they start to really make clear is the opportunity to have true digital property rights. So in the real world, we have property rights. We own things and we can buy and sell things. So if I own a book, I can sell you that book and you can buy it from me, or I can give it to you physically. It's scarce. In the digital world, we don't really have that. So you have digital images or digital videos, you put them on YouTube, you try to monetize them, even this digital content, right? You're putting it out there, but there's no way to really protect it and say, only the people that have these keys can get access to it. So you have paywalls and things like that, but NFTs are a powerful example of what crypto and blockchain can do to usher in a new era of true digital property rights, where people can exchange digital property and have an exchange of economic value for those digital assets with confidence that there is real scarcity of those assets, that they can't be reproduced willy-nilly. So right now with NFTs, the kinds of things that people are putting NFTs on that are getting a lot of attention in the media include digital artwork, digital sports videos, crypto kitties, crypto punks. And so you look at these things, and for some of us, you go, well, those don't really seem that valuable. The value being put on these things seem artificial. But I think we have to look a little further down the road and understand better how NFTs are really opening up this world of digital scarcity and digital property rights, and start to think about the kinds of things that NFTs can be wrapped around and what that's going to mean for the future of commerce on the internet and in our world, and really for the future of the internet itself.
No, fantastic. We're with Dr. Richard Smith, who, if you don't know, is the CEO of Trade Smith and Trade Stops, also chairman of the board for the Foundation for the Study of Cycles. And Richard, what's going on with the study of cycles lately?
Hey, Josh, good to be with you again. Quick clarification there. I'm the former CEO of Trade Smith and Trade Stops. And I am currently the chairman and the CEO of the Foundation for the Study of Cycles. So,
did you sell? Wait, did you sell for a big profit?
It was a fair price, and I am continuing to pursue my passion to bring financial wisdom and financial technology to everyone, and not just to the.
Now we're having Richard Smith on talking about NFTs, crypto, but I'm also going to have him talk about cycles and some of his trading stop strategies, because he's somebody who, if you want to know like how to properly evaluate when you get out of a stock, he has some nice pithy rules for exit strategies. He's also a friend of our Stan Harley, who's a member of our team now. He's our chief market strategist.
Oh, fantastic. That's great to hear. I didn't know that.
So we have our own cycles guy. And
excellent. Congratulations.
You guys knew each other back in California, I think, with the Foundation for the Study of Cycles. These guys are unique. Yes. You know, we should do a YouTube of the meeting of the minds that come together for these events. I've been a fly on the wall at a couple. I've been a fly on the wall at a couple of them, and there's some interesting characters. You know, they're people who follow the lunar cycle. There are people who there's all kinds of interesting people in the world of technical analysis. So we're going to have a whole segment on NFTs, but then I do want to have you talk about how to properly exit market positions. It's something that people don't really know how to do. So congrats for the sale, and hopefully you got a lot of money. So, and then so basically you are a technical analyst by trade. And so where did you become like interested in NFTs?
I've been interested in crypto and blockchain for probably about 5 years now. Believe me, I thought I was late to the party 5 years ago. So everybody who feels like they're late to the party today, don't be discouraged. And it always feels that way. But to me, Josh, I have a lot of concerns about the way that the internet is structured today. These kind of highly centralized businesses that seem to just suck up everybody's data and know things about us that we don't even know about ourselves, and engage in behavior modification with that data, for purposes that might not be our own. So I see crypto and blockchain as the basis of a new, more privacy-focused, more rights-focused internet, where individuals and small businesses can start to reclaim some of the power that has been really concentrated in these massively centralized, unbelievably profitable corporations.
In January 2020, there was a Decrypt.co article called "Why Decentralization is the Future of Social Media." And we see the decentralization of art, the decentralization of finance with crypto. Although, with the Winklevi twins, you basically have decentralization of crypto in the hands of some of these elite corporations, Coinbase, et cetera. I do want you to talk about that. But what about, I've been hearing about this decentralized social media, but I'm not seeing it. Do you see it on the horizon?
I think it's going to take some time to really come into focus. I think it is happening in limited pockets. It's certainly not something that has reached any level of mass adoption at this point. And there are challenges for mass adoption to the decentralization movement. But it's early on, and I think it's similar to where the internet was itself 20 years ago, 25 years ago, when people didn't know what a .com was, or what an IP address was, or what a hyperlink was. All of these things, if you remember, Josh, were really mysterious and being dismissed by people. And I feel like that's kind of a similar place that we're at with the decentralization technology that's being quite, rapidly developed today. And look, Bitcoin is at $60,000, $65,000. Coinbase is worth $75 billion. There certainly is some mass adoption going on. And maybe we're not in the early days. Maybe we're closer to something like the .com bust of March of 2000, and we can get into that a little bit.
Yeah, I do want to get into that because is this the March?
And
Yeah, I do think it's coming. I mean, if you look at decentralization, which just to be simple, and maybe I'm botching this, but centralized things are like Facebook and Google, where they house on their servers your data, the characteristics about what you like. So if you're a company and you ever wonder, like, why does what I just searched come up on my Verizon TV Fios commercial and vice versa? Advertisers pay money to garner your media attention because of the servers that Google has and Facebook and whatever. So Facebook buys Instagram and I buy WhatsApp. So basically they can spy on you and give you ads that are more relevant to your natural desires because they know what you want more than you do because they know what you click on. So they can, someone once told me, if you look at the like button, Facebook changed the like button to the range of human responses because they found the like button gave a certain dopamine hit, but the love button gave another one. The cry face gave another. So they know what level of serotonin and all of these various chemicals in your brain. They have, data scientists that can see what you really want. So I think it's going to be hard to break free from that centralized movement. Yeah. Apparently there are Steemit and Minds are two most popular decentralized social media apps, but I never even heard of them. So I'm all for decentralization. Yeah, go ahead. Well, let's take a short break. And when we return, we'll be back with Dr. Richard Smith, CEO of the Foundation for the Study of Cycles, on NFTs and the surge in cryptocurrency. We'll be back after these messages.
It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jalinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Hey, meet you out on the first tee?
Yeah, I'll be right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jalinski.
Josh Jalinski is your guy?
Listen, if you're 10 years or less from retirement,
Which I am.
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jalinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
Back with Dr. Richard Smith, the CEO of the Foundation for the Study of Cycles. Now, Twitter founder Jack Dorsey sold his first tweet as an NFT. What about those who say NFTs are really no thing? They're really nothing. It's like a scam. You know, I get that it's a way for artists to mark what is truly theirs, but it seems a little bit scammy to some. What say you to that?
I think that's an understandable perspective given the kinds of things that NFTs are being applied to right now. When you see Jack Dorsey's first tweet selling for millions of dollars, or you see Christie's selling a $69 million digital artwork that most of us, when we look at it, probably wouldn't even feel was art. So look, for some of us, it's hard to sympathize with the valuations put on these things, but I think we have to separate that out from NFT as a technology itself. And I think that NFTs as a way to secure digital assets and to exchange real value online with a new form of digital property rights, I think that is a big deal, and something that increasingly more valuable things that we can all relate to more are going to use NFTs to create new marketplaces online.
Yeah, I think the biggest benefit to NFTs, and I think the U.S. PTO, U.S. Patent and Trademark Office, should embrace it really as a way to protect artists, to protect individual property rights. To me, the value of NFTs that will transcend the fat Donald Trump, and I say that respectfully, that was the picture that went. Was that the one you're talking about that went for $69 million, where Trump was like?
I think there was a lot of those pictures, 5,000 of them, 5,000 days or every day.
Yeah, there was some Donald Trump thing that went for
every day.
66 million, where 69 million was the large Donald Trump that was, to me, crazy. But, I extract that part of NFTs for the digital intellectual property rights. So I think that could be a really cool thing in the future. That way, you would basically have no need for trademark law disputes. You would have like a mass NFT database, and whoever owned the first NFT would have the rights in that. I could see it really great for intellectual property rights. Also to stop the intellectual theft coming out of China and elsewhere. What say you about that? That's where I really think the greatest import is.
I agree. In fact, I'm invested in a company personally that is using NFT-like technology to create a new property for patents and a new marketplace for patents and intellectual property.
Wow. Yeah, I'd love to know more about that.
And I think it also has applications to financial services, Josh. Our line of work. Think about the content that we create, or even the algorithms that get created. Insights, methodologies, why couldn't those be wrapped in NFTs and have those NFTs become more valuable if the insights or the algorithms that are wrapped in that NFT prove to be valuable and create value, and then those you can you can exchange them online for that value.
Yeah, to me, it solves the problem of who created what first. And that, to me,
way of summing it up.
is the biggest benefit of NFTs. I think we're in this, Snoop Dogg is in it and all these weird, players that are feeling I think the benefit there could be music property rights, and you won't have these disputes between Taylor Swift and her former man. I do think as musical artists also have some benefits there. So you were mentioning we are near March of 2000. Let's unpack that a little bit. Are we at March of 2000 for the markets or crypto or both? What say you about that? Is crypto in a bubble?
I think it could be in a bubble. Every 2 decades, every 20 years, there is often a significant correction in the markets for the first couple of years of every second decade. And we haven't really had that yet. We're up on the whole for the years 2020 to 2022. So obviously there's a tremendous amount of positive sentiment in the markets right now, a tremendous amount of speculative fever. And I think anybody who was around in 1999, 2000, this feels familiar to them. And so there's a lot of data that shows that the speculative fervor is very high. We've basically been in a bull market since the 2008-9 financial crisis with all the quantitative easing. And with these kind of market cycles that have pretty consistently manifested every 20 years for the past century, I do think that there's reason to be cautious and to certainly be a little more vigilant in terms of our investments right now.
So is crypto in a bubble and the stock market a little bit of both there? I mean, is crypto
Definitely. I think crypto crypto I kind of group with technology investing in general, and you see a lot of very high hopes and growth projections for technology companies. I think you see it in SPACs, right? And what's happening there. You see it in the interest in penny stocks and the interest in call options, the retail trading volumes. There's a lot of stuff that's off the charts at levels of optimism that are unprecedented.
Yeah, well, actually, I would say it is precedented. It's very similar to late 90s, like you said, early 2000s behavior.
Yeah.
What are you seeing with your with crypto as a cycle? Will it have this? I think you're more of a crypto bull, but where do you see it in its life cycle? Typically when these things have early adoption, they peak almost like the .com bubbles, and then they go down 90%, and then they start building steam along the next decade as you have greater and greater adoption. Or has that already come? And with BlackRock getting into it, and Coinbase, and Fidelity is now getting into, they have a whole group, Fidelity Digital Assets. Are we sort of at the mass market adoption?
I think that it's important to distinguish between our opinions and our strategies for managing risk in the markets, right? So, my opinion, Josh, is that we are in a bubble in these crypto-related asset prices. And that's based on my personal experience. It's based on some data. And so my sense and my feeling is that we are closer to a top than we are to a bottom. And this isn't a place that I'm personally that comfortable buying. But the main thing that I've learned about markets over 25 years is that markets don't care what I think. And markets can remain irrational longer than we can remain solvent, right? So that was John Maynard Keynes, I think, who said that. But that fact of markets, that they can blow our minds, that they can do things that none of us ever expected, and that in fact they seem to regularly do things that none of us ever expected. That's the main aspect of markets that has really fascinated me, and that most of my work is about kind of figuring out how to make sure that I benefit from market madness, and instead of being, really beat up and possibly even financially destroyed by market madness. And I think that's a lot of what your work is about too.
Yeah, you could definitely be destroyed. The average person is being lured in. Also, what people don't realize is the market always prices in the future. So is the price of Bitcoin today people saying, okay, now I see mass adoption. I see how it's going to work a little bit more, but then we'll have this washover effect like we do with all markets, Although,
I feel like Bitcoin is at a similar place to where Amazon was in 2000. And if you had bought Amazon at the top in 2000 and held it for 20 years, you'd be thrilled. But Amazon fell, I think, as much as 95% from that 2000 top before finally basing and really starting to take off from there.
Yeah,
that's my personal feeling. I could be wrong, but that's my sense of it.
But you also believe, though, that it could become foundational to the economy long term. That it,
And that's why I say it's like Amazon. So Amazon has become foundational to the economy, but there was a very painful period where that was called into doubt. And but yes, I do think that Bitcoin and cryptocurrencies and blockchain generally are going to become foundational to a new economy. Absolutely.
Like the internet. But we could be at internet 1999, not at internet 2020. They take,
and that's a risk that everybody has to understand and factor into their decision making.
Sure. No, wonderful. It's a great point. So we'll be back with Dr. Richard Smith. We're taking your calls all hour at 800-321-0710. If you have a question on NFTs, crypto, whatever it be, call us now, 800-321-0710, and call us right now at 888-988-JOSH, and you get the new book, The Income for Life Blueprint. So if you're listening and going, you know what, I like NFT and crypto, it's interesting, but when am I going to retire? Can I retire? Do I have enough money to retire? Am I on the path? See, that's the thing. A lot of these things are hot right now. Coinbase's debut. But you know what? If you bought Coinbase the day the IPO came out, you would have lost like $100 a share. So the average person listening or watching on our YouTube, and you can find and subscribe, hit the subscribe button on our YouTube. Just search for The Financial Quarterback on youtube.com. Most of you should not forsake basic blocking and tackling measures of financial success, which are saving 15%, having term insurance equal to 20 times your nest egg, having disability insurance, learning about Roths and IRAs. Yes, all of these other things are important, but remember, you're going to get old someday, and that day might be soon, and you have to convert your dollars to an income stream in retirement. So call us now at 888-988-JOSH, and we will give you for free this book, The Income for Life Blueprint, and I will break down for you step by step a hypothetical blueprint of your direct income. So call us now, 888-988-JOSH, 888-988-5674. We'll be back after these messages.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jalinski, the Financial Quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH, it's a great thing to do. If you're stuck at home under stay-at-home orders, call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jalinski, host of the popular Financial Quarterback radio program, 888-988-JOSH.
Is Josh Jalinski, the Financial Quarterback, with Dr. Richard Smith. And folks, if you want the Income for Life blueprint, call us today, 888-988-JOSH. Operators are standing by. So, Dr. Smith, we're talking NFTs, crypto, and whatever you want to talk about. What is keeping you up now about? So you're a cycles guy. Are you still a cycles guy at heart? Are you?
I absolutely use cycles and seasonals in my decision making and in my work, and I am the chairman and CEO of the Foundation for the Study of Cycles. So yes. I love cycles. They're not the only thing I use, but I do think that they are important, effective, and have a role to play in our decision making and our analyses.
So what are you thinking about cycles? Stan's talking about the 34-week cycle, maybe, topping out in the next couple of weeks, and we'll have a little correction from May into late June, although with cycles it can change any moment. Short term, what are your thoughts on the market? Long term, when do you think we'll have a steep correction? But he doesn't think it's going to be the big one everybody's thinking it might be. What say you? He still thinks he's still pretty bullish.
There are some very powerful seasonal trends in the markets right now, from April through mid-May at least. Tend to be a very bullish period, especially in the first year of a presidential cycle. So those are some real tailwinds in the markets. And then I think that we also have to factor in the quantitative easing and the stimulation that has been really riding a lot of the more bearish cycles that we'd find in the markets typically, and those seem to keep just getting blown by, or at least not having sharp corrections. So overall, it's hard to argue with what Jesse Livermore famously said. It's a bull market, don't you know? And so meanwhile, strong seasonality, obviously some excessive sentiment in the markets right now, concerns about the risk of a sharp correction, everybody running for the exits at the same time, at some high valuation levels already in the markets. So keeping an careful eye out on things, but I think that we can't argue with the bullishness and the breadth that we've been seeing. Speaking of cycles work, I'm a big fan of the McClellan family, Tom McClellan and his McClellan report, his father Sherman McClellan, who developed the McClellan oscillators, along with his wife, who's been a big supporter of the Foundation for the Study of Cycles. They do incredible work, and Tom's report is one of the best out there.
No, fantastic. Yeah, I know. Stan always speaks highly of him. We've had him on before. He's a wealth of knowledge. So with crypto, what are your thoughts on the current Bitcoin surge?
I think that there are good foundational reasons that can justify this level of valuation. I do think that Bitcoin will continue to play a significant role in the future of the economy. I think it is an incredible way to store and exchange value in a very efficient manner. So it's here to stay. I do think it's gotten ahead of itself. Whenever you see the public get this level of interest in an asset that goes up extremely fast, it's certainly should give you pause. But at the same time, I think that we have to acknowledge that it is playing an increasingly relevant role. It is being adopted. You saw Fidelity and Square and one other group, I think, come out and start a Bitcoin lobbying group to get regulators to bring some more clarity to the situation. So I do think it's here to stay. And I think that it's going to continue to have a lot of positive media coverage as it gets more adopted by institutions. So I think it could go higher from here. I'm still long.
So as it relates to Bitcoin, you're a Bitcoin bull. Are you a Bitcoin maximalist? There are some people who describe what Bitcoin maximalism is for those who don't know, and then are you one?
Bitcoin maximalism is the thesis that you really only need one cryptocurrency. Currently, Bitcoin owns something like 60% of the cryptocurrency market, 65%. And so it will continue to eclipse all of the other cryptocurrencies out there. And you only need one. So I'm not a Bitcoin maximalist. I do believe that there will be other cryptos and blockchains that will play a significant role in the future of the economy. I think Ethereum is showing some strength, and smart contracts are really starting to create more value and be more appreciated. At the same time, I think that there's still big open questions about what cryptocurrencies and blockchains will really be the future of a new internet and a new digital economy. And I think it is very analogous to what we experienced back in 2000. You know, there will be some cryptocurrencies that are the pets.com of 2021, and there will be some that are the Amazons and the Apples. So
now, what about
that is still yet to be determined?
What about the comments of Peter Thiel a week ago or 8 days ago that he thinks China could hack into it? Now, I was taking his comments not that China would hack into it, but that China would use their defensive budget to mine more of it, which would threaten the dollar as the world's reserve currency. So a lot of people said, oh, exactly, Bitcoin can't be hacked. Although for the average person, I want you to explain why Bitcoin can't be hacked unless you're not, you can't speak to that. But I thought his comment was it's a defense. Like, so the U.S. defense budget should be mining Bitcoin so that other foreign actors don't diminish the U.S.'s power. That's how I read his take. What say you? And then I want to answer your question about the hacking of it.
I think that what Peter Thiel was talking about was really the unique role that the primacy of the U.S. dollar plays in the global economy and the power that gives the United States, the economic power. So China encouraging Bitcoin adoption is actually doing it to undermine the primacy of the U.S. dollar, to create other currency alternatives to the U.S. dollar, and that undermines U.S. global power. So that made total sense to me, that would be a good strategy on the part of another global superpower that wants to undermine the United States. So yes, if Bitcoin can become something that people start to think of as a potential world reserve currency, that absolutely undermines the power of the United States that enjoys a unique position with the U.S. dollar.
Yeah, imagine the U.S. not be able to get foreign countries to buy our debt. Imagine if all the foreign countries don't want our debt to build roads and bridges to nowhere and all these other things. Imagine if no one wants to buy at the auctions anymore because they're all buying at Bitcoin. So what do we do in a world to protect the U.S. from that? The Bitcoin people would say, well, the U.S. government should mine Bitcoin take our defense budget and just mine the remaining 2 to 3 million Bitcoin left, because there's only 21 million. So what say you? I'm also worried about China with Taiwan, and there's this chip shortage. Part of me thinks China remanded all the chips from Taiwan, and they're using them to mine Bitcoin. What say you?
I haven't followed that, so I can't really say. I think that the risk of Bitcoin replacing the US dollar is a lot less than what the headline grabbing comments of Peter Thiel suggest. So I don't think it's as big of a threat as the media has made it out to be.
Now, what about the selectivity of investing in firms that stand to benefit in blockchain? So do you like, we're not recommending anyone buy or sell over the air, but, how does one take advantage of blockchain if they don't want to buy Bitcoin, but they want some exposure to that asset class? We will be back with the exciting conclusion to that question. But first, call me right now, 888-988-JOSH. Request your no obligation review, and you get the free Income for Life blueprint when you schedule and keep your no obligation review. And it's a very important book for those of you. It's practical. Some of this Bitcoin, NFT talk, it's not really, when you come down to it, we're still going to be converting Bitcoin to dollars for the time being. You're still going to take your profits and convert them to US dollar to buy a home. Now, eventually, as this technology unfolds, more people may want Bitcoin than US dollars. But call us for the Income for Life blueprint today, and you will get 3 free gifts when you schedule and keep your no obligation review. Number 1 gift, a 45-minute strategy session with the team at the Financial Quarterback. Number 2, the Income for Life blueprint book. And number 3, your very own customizable blueprint where you could see year by year where you stand in your retirement. So call us now, 888-988-JOSH. 888-988-JOSH. We'll be back after these messages.
Josh Jalinski, the financial quarterback here. In these uncertain financial times, it is imperative that you guard your financial future. If you call within the next 3 minutes, we will offer our complimentary bear market survival guide, which will detail steps to help your plan to potentially survive the COVID-19 crisis. The bear market survival guide will cover how you might still be able to retire amid a volatile economic climate. We will throw in our complimentary 27-point ultimate game plan for retirement. Call us at 888-988-JOSH, 888-988-5674 for your bear market survival guide.
Call Josh Jalinski, host of the popular Financial Quarterback radio program, 888-988-JOSH, 888-988-JOSH. It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jalinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Okay, we're back with Dr. Richard Smith, the CEO for the Foundation of the Study of Cycles. So what about investing in exposure to blockchain? What types of stocks would you recommend to get some exposure without investing in Bitcoin specifically, without giving buy or sell recommendations?
I mean, I'm personally a fan of Coinbase, and I think that it's a on-ramp to the blockchain crypto world that is an incredible brand that has unbelievable goodwill at this point and has 56 million customers, which is just astonishing. So I think that Coinbase is really well positioned to be the Apple and or the Tesla of the crypto blockchain world. And I think that they're going to be a big influence in that world going forward. Now, I'm not a buyer of Coinbase at these levels. I did try to get in at what I thought was a fair price in the IPO, but it opened way above what I was willing to pay for it. So
now, as it relates to Coinbase,
interesting.
I think the risk of Coinbase, though, is a Vanguard or a Fidelity gets into it, charges a fraction of what Coinbase charges, and then puts them out of business. So, what about that?
I think that they
theory?
absolutely have pressure coming on their transaction margins, but I think that when you have 56 million users who see you as the on-ramp to this world and somebody who's managed kind of to balance, I guess, the tension between kind of the anarcho-capitalist tendencies of Bitcoin and blockchain and the more publicly digestible aspects of crypto and blockchain. I think that's a lot of branding power, and branding power really matters in the world today, in our world today, in our attention economy. So I wouldn't undersell Coinbase. I think they're going to be hard to unseat, and it's not going to be as simple as just offering lower prices. I think they're going to be able to diversify their revenue stream fairly quickly, and they're going to be a formidable player for a long time to come.
What other players do you like in the Bitcoin space? Like some say the Cash App, PayPal, Square.
There's certainly Square and PayPal and MicroStrategies with Michael Saylor. I think they're all doing interesting stuff. But in terms of a brand that can really be one of the leading lights in the crypto blockchain space, I don't see any other real viable candidates besides Coinbase right now that is available to the public.
No, wonderful. Well, thank you so much. This has been good. What about you're kind of noted in some of your work for the proper way to put a stop in on a stock. And I think your methods became so famous that I would argue, I don't know if you've ever heard this, but it sort of triggers all these systems. And I saw it in March. I don't know if you saw this, March of last year. Once everything hit like a 20% trailing stop, everybody started selling. Mm-hmm. And the reason I picked the bottom very, unofficially, but among our groups, I saw that we hit bottom in late March of last year, because my theory was, the reason why we had this sharp 40% drop is you had all these computers telling their algorithms or whatever to sell. They sold, and then we kind of had this washing effect around March 23rd, 24th, and then there were no more sellers left. Has your formula become so mainstream it's not a good one anymore? No offense. And first, tell people your kind of general formula first, because they may not even know what I'm talking about. So,
well, this is the first time I've ever been credited with possibly contributing to a major market crash. So thanks for that, Josh. Look, the basic thing is that most people, and this is Nobel Prize winning economic research, most people are risk seeking when they're losing and risk averse when they're winning. What does that mean? First of all, Daniel Kahneman in 2002, Richard Thaler in 2017 got Nobel Prizes in economics for pointing out that we hate to lose, which sounds kind of silly. So true that it's just a truism, but the fact that we hate to lose has different consequences for our decision making depending on if we're underwater on an investment or if we're winning on an investment. When we are losing on an investment, we don't want to sell because we hate to lose, and that means selling equals loss in our minds. So we take more risk. We double down, we triple down, we turn a short-term trade into a long-term investment. But then when we're up on an investment, the fact that we hate to lose attaches itself to our profits, and we become risk averse and get nervous about staying in the markets. Excuse me. So we're risk seeking when we're losing, we're risk averse when we're winning. Meanwhile, markets regularly do things that totally defy logic. So psychologically, we have a mechanism for getting destroyed by the market madness and not really having our profits defy our wildest expectations. So that's the genesis of why even a simple trailing stop is a very...
So we'll talk about that. We got to take our final break of the hour. Trailing stop, what's the appropriate amount? And did Dr. Richard Smith break the market in March? When we return, this is Josh Jalinski, the Financial Quarterback. Don't touch that dial.
Hey, meet you out on the first tee?
Yeah, I'll be right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jalinski.
Josh Jalinski is your guy?
Listen, if you're 10 years or less from retirement,
Which I am.
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jalinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
So we're back. This is Josh Jalinski, the Financial Quarterback. And I don't mean to credit you with the market crash of March 2020. But what I mean is so much of the market is now traded on computers that I think a lot of these people are familiar with your work on trailing stops. And they put in, a 10% trailing stop or a 20% trailing stop because you've done some definitive work on that. So I feel that when we hit that place in March, all the computers were going off with sell orders. And then sort of you give it a week or two and it kind of stabilized. There were no more sellers left. So then the market rebounded. Yep. And that's what I meant. I think your work has become mainstream, which may be a bad thing because it may. So have you ever thought about that?
I have thought about that. And look, anything that is novel in markets, and I first launched my site to track trailing stops back in 2005. So that was quite a while ago now. And anything that works will be adopted by more people, and then it'll stop working. So there's always that risk. We always have to be attentive to what's going on in markets, and certainly markets have been driven by algorithms and computers more and more. I don't think I am the only one doing that work by any stretch. I think that I brought it to the public's attention, but plenty of smart people have figured it out along with, or even before me. Cliff Asness over at Advanced Quantitative Research, kind of the father of momentum-based investing, is one of the prominent guys who really made a lot of these initial discoveries and whom my work was inspired by him. So yes, we always have to be vigilant to make sure that what has worked in the past will keep working in the future. But for me, Josh, it's always really been about human behavior more than the algorithms. And as human beings in the markets, we have to find a way of making sure that we're not risk seeking when we're losing. We're not doubling down on our winners. We're not on our losers, right? We're not letting our losers get away from us. And we start letting our winners get away from us. And that really is what your work is about. If you were talking about blocking and tackling, you got to do the basics.
So you're still an advocate. So you're still an advocate, excuse me to interrupt, still an advocate of the 20% trailing stop as a general method of risk management.
I think if you don't have anything else, that's a great place to start. I developed some volatility-based strategies to more tune a trailing stop to the volatility of a specific stock. And I think that's really useful information too, just to understand that some stocks vary more than others, right? And that's a factor in your decision making. And ultimately, how do you put together a portfolio of assets that vary together, right, in a complementary way? And that's another thing that the public doesn't think about enough. So, yeah, this is simple, basic stuff that ultimately is about addressing human behavior. And unfortunately, a lot of institutions know more about us than we know about ourselves, and kind of lure us into reactive decision making instead of proactive decision making based on real knowledge and real confidence.
Where can people learn more about your work and this volatility component to trailing stops?
drrichardsmith.com, drrichardsmith.com.
Wow, this was fun, and we got to some pure gold at the end. So thank you, Dr. Richard Smith. And this was fun. We'll have to have you on back soon about. We had a trailing stops hour with you years ago. I want to have that again. That was a lot of fun. So,
Great.
folks,
well, thanks for having me, Josh.
Give us a call. Thank you for joining us. drrichardsmith.com. Is it drrichardsmith.com or drrichardsmith.com?
drrichardsmith.com.
drrichardsmith.com. This is Josh Jalinski, the Financial Quarterback, and we're taking your calls all hour at 800-321-0710. When we return, call us at 888-988-JOSH for the Income for Life Blueprint when you schedule and keep your no obligation review.
WOR and WAXQ HD2 New York.
The eyes and ears to your world. We are the voice of New York. 710 WOR.
An iHeart radio station.
47 degrees at 10 o'clock. Good morning. I'm Paul DeCastro. Prince Philip, the husband of Queen Elizabeth for 73 years, is being laid to rest today. The funeral procession is underway at Windsor Castle near London. Because of strict COVID safety protocols, only 30 guests will be at the church service, and all in attendance will be wearing masks and seated 6 feet apart. Also, the family is following Prince Philip's wishes for the funeral to be ceremonial and not a state event. There have been a staggering number of mass shootings in the U.S. this month alone, a total of 29 now, including Thursday's massacre in Indianapolis. The White House facing tough questions about whether the president is giving enough attention to the surge of gun violence. More from ABC News White House correspondent Mary Alice Parks.
This is an issue President Biden has been working on for years. He said again yesterday that he supports a wide range of gun safety measures like universal background checks, which the House passed. He supports a ban on high-capacity magazines. And recent polling suggests that those measures are extremely popular. But the president's argument has been that Democrats are not the ones standing in the way. Yesterday he again called on Republicans in Congress to act.
Meanwhile, Governor Cuomo is warning New York City will not bounce back economically until people believe that the city is safe.
The gun crimes and the increase in crime is frightening people. I hear about it all the time.
Shootings are up 57% over the first 3 months of the year compared to the same time frame last year. Mayor de Blasio has vowed to address the surge in shootings. Well, it's a big boost in New York City's race to vaccinate. Starting today, all New Yorkers ages 50 and over can walk into any city-run COVID vaccination site and get the shot without an appointment. Previously, walk-in appointments were only available to residents 75 and older. There are 31 vaccination locations throughout the 5 boroughs. More than 3 million New Yorkers have received their first dose, and Mayor Bill de Blasio says the goal is to fully vaccinate 5 million residents by June. In sports, the Yankees fell to the Rays yesterday, 8-2. They've dropped 3 straight. NBA, the Knicks have won 5 in a row as they beat Dallas. It was the Nets stinging the Hornets. And in hockey, the Islanders got by Boston 3-0.
Here's your WOR Weather Channel forecast. Mostly cloudy this afternoon. The high will get close to 57 degrees with a light breeze out of the northwest at a cloudy sky tonight with a low down to 45. After some early sun to start off Sunday, increasing clouds into the afternoon with a high of 63 and a warmer Monday with a mix of clouds and sunshine at a high in the upper 60s. I'm meteorologist Jeff Marr.
Next news at 11. Start your day with Len Berman and Michael Rito in the morning, 6 till 10 weekdays. I'm Paul DeCastro and 710 WOR, an NBC News radio station.
Tired of losing money in the stock market roller coaster? Frustrated with the government taxing you into oblivion? Worried about inflation? How do you prepare for so many financial uncertainties? Welcome to the show that will help you develop your game plan. The Financial Quarterback with Josh Jalinski. Josh is a noted financial advisor and president of the Jalinski Advisory Group, and he's here to answer your questions. Call into the show at 800-321-0710. 800-321-0710. Now, let's kick off your financial future. Here's Josh Jalinski.
We're back. This is Josh Jalinski taking your phone calls at 800-321-0710. This is the Financial Quarterback taking your calls at 800-321-0710. And we have questions on stocks, bonds, annuities, mutual funds. Do people really want to know about Bitcoin? Our listeners. I can give a Bitcoin tutorial, but I want to know if our listeners even care. Or are we... give us a call, 800-321-0710, if you want a little Bitcoin tutorial. But let's go to what I think is the biggest news you didn't hear of this week in the world of finance. Ed Slott uncovered this on the Secure Act. The Secure Act, we all thought it was going... So basically, the IRS is now coming for your IRAs. Well, if you didn't know that, I mean, it's kind of a clever way to say it. But when you do a 401k or IRA, you're choosing to not pay taxes today in order to pay taxes tomorrow at probably higher rates. So an IRA is a great place for somebody to start if they've never done saving. A Roth IRA grows tax-free. You can pull it out tax-free because you put it in with already taxed dollars. So it's not like a gimme for the rich. It's you're paying the taxes now. And so that the government doesn't have to take care of you when you're older, they're incentivizing saving for retirement. So it's a great plan, other than, to me, going to a flat tax system would solve all this, but that'll never happen. So the Secure Act is a major piece of legislation, and the IRS apparently surprises many with an apparent explanation of the Secure Act rule. So what happens is, if you have an IRA, when you die, your heirs, so let's say Ernesto passes, leaves his IRA to his nephew or niece or somebody great, they used to be able to take distributions out over their life expectancy. So almost like an annuity for their life. So it was a nice middle-class trust. But President Trump changed all that when he signed the Secure Act into law. And basically it said after 10 years, all the money has to be taxed. It has to be paid out, which I guess theoretically I'm fine with. It's not a tax hike, but it is a way to stop one of the biggest gifts to middle-class wealth distribution in the last 100 years. So if you had money in an IRA, your heirs could literally have that for as long as they live. The Stretch IRA was an amazing tax savings vehicle for the middle class. But just a few weeks after the start of baseball season, the IRS has thrown us a curveball by apparently interpreting the Secure Act's 10-year payout rule in a majorly unexpected way. We say apparently because the IRS's explanation isn't very clear. Surprise, surprise. And even if it was clear, the IRS offered the information in an informal publication that should not be relied on, but it does leave us a clue. The 10-year rule was thought, so let's say you have 100 grand in an IRA and you die. Your heirs, let's say your son Johnny and your daughter Jane, have 10 years to spend all the money and pay all the taxes due on the 100,000. The old interpretation thought that they could wait till the 10th year to spend it. They could take a little bit out every year for 10 years, or they could wait till the 10th year, spend it all, pay the tax in the 10th year to take advantage of 10 years of tax-deferred compounding. Not so, says the IRS in their latest publication. Now realize this isn't final yet, but it gives us a clue to what they are thinking. The IRS thinks they're a partner in your IRA. Theoretically, that was always a part of the deal. People, I don't know what you were paying attention to, but the IRA was always, there's a tax lien on your IRA or your 401k. Now, does that mean you shouldn't do it? There are some idiots on social media who say, oh, don't do a 401k ever. Don't do an IRA ever. Now, if that's the only thing you're doing, I would agree, meaning you should have a varied plan. You should have an emergency fund before you have an IRA. Do you have 6 months of cash savings in the bank so that if you lost your job and had no means, you could be okay for 6 months to get back on your feet? If you do not have that, do not pass go. Do not collect $200. Have an emergency fund. Do you have term insurance equal to 20 times your pay that's convertible to a good permanent policy? Term insurance is more important. Remember in math, there was the please excuse my dear Aunt Sally. Do you remember that? Remember that, Ernesto? Or were you asleep in high school? Do you remember
I was
that?
sleeping in high school, but that sounds so familiar.
We have another member of the guest, Bob. Our brother
yeah, we
Ted.
have.
Are you brother Ted? Whatever. So Bob is famous. He's in the studio, or infamous, depending on who you are. So Bob, do you remember PEMDAS? Please excuse my dear Aunt Sally, or no? Am I the only one?
I remember
must have
neither
been a geek.
of those. I've got to tell you, my education was clearly deficient.
I must have been. Were you public schooled, parochial schooled, homeschooled?
Public school in Texas, though. So
in Texas.
There may be regional differences.
So I was public school in New Jersey. So maybe that's one benefit of the New Jersey public education system. My wife's a public educator, so we love teachers. So the point that so PEMDAS is please excuse my dear Aunt Sally. That there's an order of operations when it comes to math, parentheses, exponents, you get the whole thing, multiplication, division, addition, subtraction. PEMDAS. So now everybody's shaking their head. They sort of remember that. So PEMDAS, there's a PEMDAS when it comes to finance. Term insurance, car insurance, home insurance, life insurance, getting a will, emergency fund. Then you start saving for retirement. So it's not that it's unimportant. It's that there's a prioritization before you get to it. Now, if you have an employer who's matching your contributions, you should take advantage of the max match or you're dumb, basically. I mean, if your employer's giving you 3% and you're not taking it, well, there's a problem. If your employer is giving you a match on 6%, there's a problem. Now, there are these rising TikTok celebrities and YouTube financial people who are telling you, don't do a 401k, don't do an IRA. Well, generally, they're dumb. And they're just trying to sell you something else. However, there's a risk to it that the government has a tax lien. So it's not that I'm against 401ks or IRAs. I want to be very clear. I think it's a great way. More middle-class millionaires have been created by the 401k or IRA than I think in any other way. Why? It's kind of set it and forget it money. And usually, if you don't set it and forget it, money burns a hole and you spend it on all kinds of stupid stuff. Cars, your kids, your wife, your husband, thankfully, one of the best things I did was marry a frugal woman. My wife is very frugal. So that's a tip. When you're seeking a spouse, be very cheap when you're dating. Now pay for them when you go out. I heard there's this thing of like people not paying for, the person of the opposite sex. I don't know. I think that's a little cheap. But what I mean is some frugality. Do they want the latest gizmo or tech gadget? Do they want the latest Coach handbag or the latest shoe? And it's not just, men can be spendthrifts too. And men and women both alike spend money on stupid stuff. What do you spend money? That's a good question. I want to throw it open to the phone lines, 800-321-0710. What is something stupid that you've spent money on in the last 30 days, Ernesto?
I'm going to say Uber Eats.
Uber Eats, there you go. That's a lot of these apps are an epic transfer of wealth from those of us who are dumb, lazy, or fat. And what I mean by that is because of COVID, I'm actually to blame for that too. I'm doing DoorDash. When you buy these online things, it's like $20. You tip. You see this nice person, you feel sorry, they're in a mask, they're coming to your door, they look like they haven't been making a few dollars, and you're like, I'm doing a little better than they are. Here's $5. Even though you want to stiff them because the app charges you $3, the store now charges you $2. So that's a great financial tip. Learn how to cook for yourself. But I don't know. I'm not very good at cooking for myself. So I have the same struggle. So I like ordering like DoorDash or Uber Eats. And there was a tip I heard on Uber Eats, by the way. If you get one of these credit cards, they'll pay up to $120 or $240 of Uber Eats. One of the Amex cards or something like that. So that's kind of a gimme that I heard. So Uber Eats, DoorDash, very, very good. Amazon delivery from Whole Foods. Have you done that?
I live on Whole Foods delivery. Absolutely. Yep.
That's so expensive.
You schedule it. It's totally
so
worth it.
It's so convenient, but it's so expensive.
If you think about what it costs for gas, though, it's definitely a savings.
I don't know. I don't think so, Ernesto. But no, exactly. In the pandemic, I'm not even in the pandemic. I work. We have 6 kids. It's very hard to not do the Amazon delivery. It is really convenient. So maybe you can spend more time with clients and make more money out of your time that way. I like that. That is actually something that I don't buy many stupid things, but I would say that is something. So here's the thing, tip. If you go, I don't have $300 a month to save in a Roth IRA, drive to ShopRite, clip coupons, take that $300 a month you're spending on. I looked and analyzed the Amazon purchases, and it's like $5 for a bag of Cheetos. It's inflation is here. And by the way, new economic data came out that inflation is here. Prices grew by over 2.6%. We have a very real problem. Inflation is already here. So give us a call, 888-988-JOSH, 888-988-5674. If you want the free Income for Life Blueprint, you get a 3-for-1 special when you call us today. Let's say you're driving in the car and you wonder, do I have enough to retire? Can I retire in a year? Let us help you retire quicker. No guarantees here, but we do have people. I met with somebody yesterday. We realized, okay, we put together a plan where we saw how much the husband made from Social Security, how much the wife made, and what was a reliable expectation of income from their assets. And we found that they could retire this August. So they didn't realize that. And they're almost pinching themselves. Can I really do it? Yes, you can. Now, some of it depends on how much you spend in retirement. So if you have a higher standard of living, sometimes you have to delay retirement. But why don't you find out? Call us now, 888-988-JOSH, 888-988-JOSH. Tammy says, is this live? Yes, it is live. Brother Ted talks about post-COVID economics. We'll talk about that. And John C. said, forget dating during COVID. It's not happening. Well, I would say, John, get a life. Take somebody on a date because you better share germs with somebody. If you don't share germs with somebody, pick one person. I feel bad for you, John. So I think even Dr. Anthony Fauci said you could date somebody during COVID as long as you wear a mask or something. So give us a call, 888-988-JOSH. We'll be back after these messages, 888-988-JOSH, and we'll be answering questions from the YouTube chat line, as well as those of you who call us on our listener call-in line, 800-321-0710. We'll be back after these messages.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jalinski, the Financial Quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH, it's a great thing to do. If you're stuck at home under stay-at-home orders, call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jalinski, host of the popular Financial Quarterback radio program. 888-988-JOSH.
Josh Jalinski, the Financial Quarterback here. In these uncertain financial times, it is imperative that you guard your financial future. If you call within the next 3 minutes, we will offer our complimentary bear market survival guide, which will detail steps to help your plan to potentially survive the COVID-19 crisis. The bear market survival guide will cover how you might still be able to retire amid a volatile economic climate. We will throw in our complimentary 27-point ultimate game plan for retirement. Call us at 888-988-JOSH, 888-988-5674 for your bear market survival guide.
Call Josh Jalinski, host of the popular Financial Quarterback radio program. 888-988-JOSH, 888-988-JOSH.
Hi, we're back. This is Josh Jalinski, the Financial Quarterback, taking your calls at 800-321-0710. Got a lot of people on the YouTube channel who have questions. What about post-COVID economic rebound stock plays? I think we're already there, aren't we? Cruise lines stand to benefit. Jets, sure. I don't like to invest in jets. I may be a student of Warren Buffett. They're very capital intensive. I've always found that they have trouble, whether it's, Boeing's problem and Airbus's problem. I mean, those were probably 2 really good deals in the middle of the crash last year, but they're very capital intensive businesses. And then Tammy says, is this live? Yes. Brother Ted says, but they're also cruise lines, theme parks, theater chains. Do these make sense right now? Yes, if you have some serious kahunas, because it's like, what if we have COVID wave 2? What if we have COVID wave 3? Well, actually, we're on wave 4, I think. But what if we have like COVID 21? Now we have sort of a government that said, they're talking about shutting down Michigan again. They're talking about, there's a lot. I don't want to get too much into the COVID world, but it's sort of depressing. We were told if everybody vaccinates, you can go back to normal. Now we're saying, now you can't go back to normal quite the exact way as once thought. So I don't know. We shall see. So give us a question in the YouTube chat line at youtube.com, The Financial Quarterback. We have a lot we're going to talk about. Buying Bitcoin. Interesting website on Bitcoin. corn.lol. Yes, corn.laugh out loud. Ernesto is shaking his head at me. But you can see all of the trades that everyone makes. So here's my prediction. The IRS and the SEC will embrace crypto and have mass adoption eventually because they'll be able to trace whatever anyone did and tax it at the source with a financial transactions tax. I actually think it could be brilliant. We abolish the income tax. It's not going to happen. But we abolish the sales tax, and instead you get a 1% crypto tax. So whenever you buy it or sell it or transfer it to another party, so it'd be like any time you change hands. Now, I had some guy on the show one time, and he said, if we have a transactions tax, not a financial transactions tax, not that, socialist kind of thing to punish the banks. By the way, right now, a lot of big banks aren't really winning the game of finance. A lot of the companies winning the game of finance are fiduciary firms that are putting the client's best interest first. They're low-cost brokerages. They're democratized finance. So I don't really think the boogeyman of Wall Street really exists anymore, other than in the minds of rants by the random, socialist, 78-year-old senator or something like that. I don't see how that's necessarily a bad thing. But it was interesting. I think the IRS will embrace what's called chain analysis. They're already embracing it, by the way. Google chain analysis. Talk to your crypto kid about that. They don't really know that yet. Once everybody knows that nothing will be truly anonymous, there could be a problem. Now you might say, well, what if I buy it through whatever, VPN? Well, what if you spend it? Then they'll be able to link that Bitcoin that was bought, April 1st, 2021 to the Bitcoin that bought the Tesla on November 1st of 2021. And you don't think Tesla's going to report that? You don't think Coinbase is going to report all the transactions? You don't think the Winklevi twins are going to report? The Winklevoss twins are probably one of the most interesting set of twins in history. They go from being, the people who sued Mark Zuckerberg for $45 million to now they're worth billions because they invested in Bitcoin. And they are on the next big app, Gemini, which may be even bigger. And then they own a company called BlockFi, which I think is based out of New Jersey, by the way. So interesting. So next up, we have Jeff, who wants to talk about IRA distribution changes. Thank you for getting me back to reality, Jeff. Go ahead. You're on with Josh Jalinski, the financial quarterback.
Yeah, hi. I have a question. You had started to mention that you were going to clarify with the new interpretation for how your IRA has to be distributed to your descendants, but then you sort of got sidetracked. Could you explain how they changed the rule?
Sure. Sure thing. So the new law change related to the Secure Act, the IRS, I get sidetracked by my own thoughts sometimes.
Yes.
But
it's entertaining.
It's a sign of genius. I can think on 8 levels, but sometimes it's hard to follow. It's like stream of consciousness. It's okay. So thank you for keeping me on track all the way. By the way, if any listener ever says, well, you talked about this at, minute 17 and you said you were going to bring it up and you never brought it up. Well, always call. That's why you are the original social media at 800-321-0710. So this was big. Okay. Here's the backstory. One of the major changes, and this from IRAhelp.com, one of the major changes made by the Secure Act was the elimination of the stretch for many beneficiaries of inherited IRAs. If an IRA owner died before 2020, your individual beneficiary could satisfy the RMD by spreading annual payments out over their life expectancy. For a young beneficiary, that could be 80 years or longer. So one of the things we were recommending to people is if you love your grandkids, name them the beneficiary. And if you have an 8-year-old grandchild and you die at 90, they could essentially have 90 years of tax-free compounding, so long as they take that little RMD out every year. It was a great way to parlay your IRA into a family fortune, but no more. That was one of the biggest middle class ways to transfer wealth. But you know what? We don't want middle class people to transfer wealth anymore. We only want, the uber elites. So the stretch IRA was a real blessing. I'm calling on Joe Biden to reenact President Joe Biden. We're calling on you to save us from President Trump's probably worst bill that even he didn't know he signed, which was the Secure Act. I talked to legislators. They didn't even know how bad this bill was. They said it was for the average consumer's retirement savings. It would make you more secure. And just like the Affordable Care Act made healthcare neither affordable nor care, the Secure Act made retiree savers less secure. So you might say, how so? Well, instead of getting 80 years to spread out your tax, you now had 10. So the idea was that if you have, just to use you an example, how much do you have in IRAs?
Like 2 million.
So if you have 2 million IRAs, the logic was that your heirs would take, let's say, 80 grand a year every year over their life expectancy, and 80 grand wouldn't kill them. You, my friend, are going to be seriously hurt by this new law because the 2 million, the thought was that your heirs would be able to wait for 10 years and time their distributions. So let's say you have a son who's retiring in 8 years. He could take half in the 9th year, half in the 10th year after you die, and spread the tax out over those 2 years. Now they're saying it's going to be a 10-year pay down. So they would literally have to take out something like, let's say, 200 grand plus some amortization schedule. So 205 grand that would go on their tax return, not yours, on your successful. Jeff, how many kids you have?
I have 2.
2. Are any of them fairly
3
successful?
grandkids. What's that?
Are any of them fairly successful?
Yeah, they are. They're both well. They're both doing well.
Yeah, so let's say they're in a 39.6% federal bracket under the new Biden tax code. That'll probably get passed in some type of compromise. Then you have 39.6, but even President Trump's 37. 37 plus about 10 state and city, maybe 8 if you just 8.82, but New York's raising their state tax. So let's call it 10 plus 37. So 47 cents on every dollar of that 2 million will be taxed. And when we return from the break, I'll tell you what you can do. But generally, if that's you, you should meet with us for what to do with the changes in the Secure Act review. The IRS just released some guidance on the Secure Act. Now, here's the thing. They may go back to the old way. But even if they go back to the old way, because there's a comment period, you want to make sure you send a letter to them that this would create a problem. But they're going to look at you and say, dude, you have 2 million in an IRA. You're doing well. Forget you. You're exactly the type of people we want to tax. But that's why you're exactly the type of person that we can help. And we will come up with a plan to deal with some of the deferred taxes when you pass over a 10-year plan. You cannot just rely on the stretch anymore. So call us now, 888-988-JOSH, 888-988-JOSH for the death of the stretch review. And then if you have any follow-up questions to my talk, stay on the line, Jeff. 888-988-JOSH, 888-988-5674. We'll be back after these messages.
It's always on your mind. Retirement, whether you're 55 or 35. Not everyone wants to work forever, and most would like a comfortable retirement. You may already have a plan, but is it the right one? Josh Jalinski, host of the popular Financial Quarterback radio program, is ready to guide you towards financial freedom. He challenges the ways your parents and grandparents saved money with fresh strategies, which are exactly what you need to navigate today's volatile economic climate. Josh's new book, Retirement Reality Check, is available to order on Amazon. It's an easy read that guides you through his system for securing your financial freedom, including tax-saving strategies, understanding the right investment mix, and more. Order now. Retirement Reality Check. Call Josh at 888-988-JOSH. Let Josh help you map out your retirement using fresh strategies. Call 888-988-5674. That's 888-988-5674.
Okay, we're back. This is Josh Jalinski, the Financial Quarterback. We have some more questions coming in on the YouTube, so make sure you subscribe. Go to youtube.com, search for the Financial Quarterback. And Jeff, did you have any follow-up questions to that?
No, I think you answered it. Thank you very much for all your help through the years. Thank you.
Thank you. And we'll be sure to keep it locked here every Saturday and Sunday at 9, because if there's a change in the law, we'll inform you about it. But I think regardless of what they come down on, the debate was your heirs could time it based on their income. So we were telling heirs, hey, maybe retire in the 9th or 10th year, take that distribution. But I would actually say the 10-year plan that they're proposing could be worked with. And it could be worked with in a couple of different ways. So call us at 888-988-JOSH and we'll show you our death of the stretch review. Give us a call, 800-321-0710. We have another question. If we get high inflation, will real estate be a haven? I think that's already what's happening. People are very worried that our economy isn't real. They're worried that the stock market gains are not real. So I think the money is floating from real estate, from stocks to real estate, propping the real estate market up. I also think COVID didn't hurt that any. So people are going from New York and New Jersey to Florida and Texas and Tennessee. But then you know what will happen? They'll realize Florida's hot all year round. Your property tax bill. I will tell you this. I'm an expert in Florida. I mean, self-proclaimed expert, and I don't have any degrees on it. But I've seen the Florida boom for years. I wanted to buy 2-3 years ago, but my wife didn't want to move down there. But a lot of people will go, and then one of the two spouses will hate the heat. So then you'll have to buy a house back here. I think a better boom might be like Bucks County, Pennsylvania, Delaware, New Hampshire, parts of Tennessee where it's more mild. You know, I think the people move to Texas and Florida are going to realize it. You know, they didn't move there for a reason for years. Florida gets boring after about 6 weeks, I think. Florida's great like in the winter. Now, I do think a lot of people will move there and they will just say, well, I'll live there 7 months and I'll come up, I'll purchase a beach house in Jersey or the Hamptons for 4 months, the uber rich. But I'm talking like the couple that's trying to retire, or maybe they'll just deal with the heat in exchange for the cost savings. But I will tell you, a lot of people don't realize property taxes are high in Florida because it's 1.8% of the purchase price. So as their values have gone up. So I know people who bought into like Palm Beach and their property tax bill was, let's say, $9,000 because they bought a house for $900,000. Then they sold their house for $5 million. Now their house property tax is 1.8% of $5 million. So got to be careful about that. You know, there's no, and then will you like the health care? You ever hear of Naples Community Hospital, what it stands for? Anybody realize? Naples, Florida, they used to say, this is satire, so I'm not casting any doubt on Naples Community Hospital, but they used to call it Never Come Home, NCH. So, but that being said, we have that in New Jersey too. There are hospitals I would never go to. So, and to be honest, Naples Community Hospital, I think, by the way, a lot of those hospitals in Florida are going to get better and better. hospital for special surgery down in Palm Beach. Naples, so much money down there. They've probably rapidly improved their medical system. I know Palm Beach has. I know Jacksonville is a Mayo Clinic. They have an MD Anderson. So it's only a matter of time before the rich doctors move down there that everybody wants from up here. Only a matter of time. What do we do? As a society, I think, and as a state, we need to bring back the wealth. Although, did you see David Tepper, the billionaire who moved to Florida? He moved back. Somebody said he moved back. Is that true? I don't know. Google that. Somebody. Did David Tepper move back to New Jersey? I don't know. I'm not sure. Someone said he did. So we have a question on the YouTube. Do 401k plans have the same 10-year rule that you explained for spending IRAs? Yes. If you die with a 401k, you have to spend it down 10 years after death. Now you might go, I don't care about death. I get a lot of people go, I don't care what's going to happen to my kids when I die. I don't have any kids. I don't have any significant other. Well, here's the thing. If you are single with no children, do you want the government to get 50 cents of every dollar you make? Just think about that. When you could have them get 30 cents of every dollar you make. We're not talking about, we're talking about legal tax strategies. What do I mean by that? If you have $100,000 in a traditional IRA and you are single with no children, you could Roth at today's rates and time the distribution properly and pay maybe a 24% tax instead of a 50% tax when AOC is president in 2024 or whoever it might be. And now people are shaking their heads. They're saying, well, you know what? Nobody thought Trump would be president either. And nobody thought President Biden would be president for that matter. So everybody, do not think that the unthinkable can't happening. Maybe it's too many double negatives. But basically, we are living in a world now where nothing is money. Nothing is art. And Donald Trump was our president. Now President Biden's our president. And not that, I'm not wanting to get political, but we've kind of hit a brave new world. Like our whole world is very different than the world we were brought up in. Now people say, well, what do I do? I'm just going to put my head in the sand. Well, we have to teach thrift and old school work ethic and saving 10 or 15%. Because you know what's going to be the answer to inflation? More money. If we have rampant inflation, there's only one thing that'll save that. You saving more in the stock market or in various things that will inflate. Generally, real estate and stocks inflate because the price of goods and services go up. My little daughter learned the value of inflation yesterday. She opened up a Popcorners bag and she said, I don't know what she said, but she said something like, this is a travesty. She opened up the bag of chips and literally a bag of chips is now like this. $5, although we got it for a special, $2.50 or something. 2 for $5. Those popcorners, you know what I'm talking about? They're really good. The kettle corn popcorners. So they're in, and basically 2 large handfuls of an adult are now what fills a bag of potato chips or popcorn chips. If that isn't inflation, I don't know what is. Now, I don't know. We'll see. So I think inflation's already here. That's why real estate has gone up. Brother Ted says, isn't there a stock market correction due about every 10 years? I would say so, but that's what the Fed is trying to stop. So in last March, we were going to have the long-awaited correction, and we should have allowed the free market to prevail, bad actors to be flushed out. I'm very critical on this. Both parties did us a disservice with COVID bailouts and with the 2008 bailout. Why do we not want to bail out bad companies? So that bad habits are not rewarded. Right now, companies that have no revenue, mind you, are valued at like $90 billion. Now, granted, you might say, but Coinbase has revenue. Okay, yes. But the point I'm trying to say is we have companies that do not make a profit, are valued in the billions of dollars, and they are pre-revenue. So if you want to look at the boogeyman of Wall Street, you really have to look at the boogeyman of Silicon Valley. A lot of people don't realize this. Wall Street moved to Silicon Valley, I don't know, in the 2000s, like 2005. So what private equity does and what these firms do is they raise money from super rich people at very low interest rates, because we've kept rates artificially low, and they take a private company public. We, the little guy, generally buy those IPOs when they're already high. So billionaires might get in at $10 a share. They get out at $400 a share. They're already out of Coinbase now. They're looking for the next thing to ride. Meanwhile, your 401k buys that in some fund and you're stuck with it. So IPOs are very risky for the average person. I was featured on a Cameron Huddleston article warning people about IPOs before this. You can just Google Huddleston Jalinski, Huddleston, for Yahoo Finance. But you have companies literally that are overvalued. They don't make money, and they're worth $63 billion. And we are rewarding that. But do I think they'll let the market crash, like 40% like 08 or without? I think it'll crash like it did in March, and then they'll announce some emergency rescue package and they'll start buying more debt and monetizing. And, we spent $900 billion in the Bush bailout, the Bush-Obama bailouts, maybe about $1 trillion, $900 billion, something like that. We spent 10 times that amount last year. So, yes, COVID, very serious. We could have spent maybe $1 trillion or $2 trillion and had the COVID relief package, maybe $1 trillion, and done the same basic thing. Now we have a 9 times greater fall maybe ahead of us. I don't know. That's what some people say, that we'll have this big one. I think the Fed, in concert with the U.S. government, once it gets to be as bad as March was, they'll have some weird way to prop up money. Maybe give away free checks, maybe universal basic income, maybe adding zeros. And then I think the big one will be when all that stuff doesn't work anymore, which might be longer than, but yeah, usually it's about every 7 to 10 years. There's a cyclical downturn. But I think, we were due to have that cyclical downturn in like 2015, and they were propping the markets up then. Then we were kind of due to have it last year, and they were propping them up. Now it's due for 2022 or 2023. And then will they do something then to prop it up? I think the Fed studies cycles. So we'll be back after these messages. Call us now, 888-988-JOSH, for your free Income for Life blueprint, 888-988-JOSH. If you wonder about when you can retire, at what income, how long is your money going to last, and about these new tax strategies in light of the death of the Stretch Act and the Secure Act, call us now, 888-988-JOSH, 888-988-5674. We'll be back after these messages.
Hey, meet you out on the first tee?
Yeah, I'll be right there. Just reading this article.
On what?
New bill Congress passed. Looks like it's going to affect the value of all retirement savings plans. My financial guy didn't tell me about this when I saw him the other day.
Well, my guy did, and we made a plan. You may have heard of him, Josh Jalinski.
Josh Jalinski is your guy?
Listen, if you're 10 years or less from retirement,
which I am,
Josh will give you a free economic plan, which includes retirement planning, a 27-point checklist to make sure your income lasts as long as you live. He'll even help you navigate the current tax code.
I'm definitely going to call Josh.
Cool, but first, can we play some golf?
Call Josh Jalinski, host of the popular Financial Quarterback radio program, for your free economic plan. 888-988-JOSH. 888-988-JOSH. 888-988-JOSH.
Are you worried about the recent coronavirus crisis and how it may have affected your money? Hi, everybody. I'm Josh Jalinski, the Financial Quarterback, inviting you to join me for my complimentary 6 Ways to Keep Calm During Turbulent Markets webinar. If you schedule and keep your no-obligation webinar today at 888-988-JOSH, it's a great thing to do if you're stuck at home under stay-at-home orders. Call us right now, 888-988-JOSH. If you're bored, there's never been a better time to get a second opinion on your wealth than right now. 888-988-JOSH, 888-988-5674. And go to my website, retirementrealitycheck.com today and take your free investment profile quiz. And when you buy my book, you're eligible for 3 free gifts. 888-988-JOSH.
Call Josh Jalinski, host of the popular Financial Quarterback radio program. 888-988-JOSH.
There's a question on the YouTube chat. Don't these Fed money printing parties designed to delay corrections foster larger, worse corrections? Yes. But who cares? Just print more money. Devaluing. Here's the thing. People are worried about income inequality when you do not have sound money. And this is the appeal of Bitcoin. When a dollar can be made to be worth 10 cents, there's a problem, and that's going to be really bad for poor people. And that's why they're going to go into universal basic income, which will further exacerbate income inequality because basically it will make people like serfs again. The rise of serfdom. So it's a shame. So what do? I don't know. We just keep preaching principles of sound money, hard work. Will the Bitcoin tendency to sound money change all that? I don't know. Because as Bitcoin has risen, MMT has risen. So, and do people really like Bitcoin because it's sound money? The appeal behind Bitcoin, for those of you who don't understand Bitcoin and it turns your head to jello, is there are 21 million Bitcoins out there and there will be no more created. Now, that's a debate. Can there be more created and all these things? But generally they say no, there can't be any more created. So it's sort of like a digital gold that cannot be manipulated by central banks. And so that's the appeal. But as Bitcoin has risen, there is a wave of thinking called modern monetary theory, where the government can just print more money and sort of add zeros to their balance sheet in order to alleviate poverty, alleviate hunger, all of these things that sound nice. But what they will in effect do is what costs you $5 today will cost you $50 tomorrow. So think of the Uber and the DoorDashes. Now it's like $22 to get lunch. It used to be $5. So you're going to have this sort of, now you might say, well, can't you still go to McDonald's and buy something for $5? Yes, now, but maybe not in the future. You're going to have these flash kitchens where they're going to charge you to eat and maybe charge you to get food. And there'll be food shortages because people won't have the money to pay $20 for lunch every day. So that's, I think, where we're going. Sounds a little odd, but it sounds a little dystopian. But, the future is always brighter than dystopians. So generally, if you're dystopian, you're wrong, except last year. So we have a lot to talk about, but I always want to hear from you. So let's talk a little bit more about this IRS rule that was changed. Congress put an end to the stretch IRA for most non-spouse beneficiary owners. For those beneficiaries, the Secure Act replaced the stretch with a 10-year payment rule. The rule requires the entire IRA to be paid out by the 10th anniversary of the IRA owner's death. Just about everybody thought the 10-year rule meant no annual RMDs were required. In that case, the beneficiary would have flexibility. She could take as much or as little from the inherited IRAs in year 1 through 9, as long as the whole thing got emptied by year 10. That's exactly how the IRS has interpreted the 5-year rule, which was before the Secure Act. Before the Secure Act, the 5-year rule was a payment option for a beneficiary of an IRA owner who died before the required beginning date. But the IRS surprised everyone in a recent revision to Publication 590B by treating the 10-year rule differently than it has treated the 5-year rule. So be very careful and be mildly cautious and get a plan about your IRAs, whether you are living, whether you inherited an IRA or about to inherit an IRA. You will want to call us at 888-988-JOSH, 888-988-JOSH. Next up, Keith, question about term life insurance. Go ahead.
Yes, you mentioned getting term life insurance and turning term into something else, and I didn't get the latter part of what you were mentioning.
Term that is convertible to a good permanent policy.
Oh, convertible.
Yeah, you want convertible term. Here's why.
Convertible.
How old are you, if you don't mind me asking?
I'm in my 60s.
So if you're in your 60s and you buy term insurance, you know, probably nobody's going to give you term beyond like 10 or 15 years.
Okay.
But let's say you're 63 and at 72 you want to convert your term to perm or permanent. You don't want to have to go through another physical.
Right.
Because
right.
you might have health ailments. So if you get term insurance, get it from a company that will convert to a good whole life, even if you got to spend a little bit more money for the term. Because permanent insurance, as people are living longer, more people want permanent insurance, and they also want it for a tax-free way to pass money to their heirs. So great question, Keith. If you want to hold on for more, give us a call, 888-988-JOSH. If you want the free review, we'll be back after these messages.
Josh Jalinski, the financial quarterback here. In these uncertain financial times, it is imperative that you guard your financial future. If you call within the next 3 minutes, we will offer our complimentary bear market survival guide, which will detail steps to help your plan to potentially survive the COVID-19 crisis. The bear market survival guide will cover how you might still be able to retire amid a volatile economic climate. We will throw in our complimentary 27-point ultimate game plan for retirement. Call us at 888-988-JOSH, 888-988-5674 for your bear market survival guide.
Call Josh Jalinski, host of the popular Financial Quarterback radio program, 888-988-JOSH, 888-988-JOSH.
This is Josh Jalinski, the financial quarterback, taking your calls on all matters financial at 800-321-0710. Is Keith still on with us? Okay, I don't hear Keith. Guys, turn up the volume, Michael. This is Josh Jalinski, the financial quarterback. And so in our remaining minutes, we talked about crypto, we talked about NFTs, we talked about an income for life plan, we've talked about the death of the stretch IRA. Congress made sweeping new changes when President Trump signed the Secure Act into law. Call us today at 888-988-JOSH for your free Secure Act guide. If you call us today, we will project out what your income cash flows will be from 59 to 89, from 42 to 82. Have you done that? It's as simple as you take your income minus your taxes, minus your expenses, and that shows you whether or not you can retire with the amount of assets that you have. So we have a calculator that will show you how to convert your assets to income in retirement. Call us now, 888-988-JOSH for that. And you get the free book today, The Income for Life Blueprint. And get my book, The Retirement Reality Check. Now, in this book, we cover an in-depth way for you to live out your retirement on your own terms, not somebody else's. Also, folks, my other tip is a lot of people are getting sidetracked with NFTs and Bitcoins and really stuff that really won't have a big impact on your life if you're not saving. So save 10 to 15% of your pay. Do the blocking and tackling. This is the Financial Quarterback Show. Make sure you do the basics. Pay yourself first. Get insurance. Do all of these things. A lot of people forget just putting money in a Roth IRA every year, putting money in a traditional IRA. You have till May this year to do it. So set yourself a deadline. Get it done. And folks, call us at 888-988-JOSH. And if you call us today, you'll get the Income for Life Blueprint. We'll be back tomorrow with all of your questions. And folks, it is a major thing what happened with the Secure Act this week. It was sort of what I was telling you would happen. But whether we have a 10-year rule or all your money has to be spent by the 10th year, if you have an IRA, if you are breathing and have an IRA and a 401k, you need to call us for the Secure Act and You review at 888-988-JOSH, because the elimination of the stretch IRA has far-reaching implications on your wealth. The preceding program was
sponsored by the Jalinski Advisory Group. Any awards, rankings, or recognition by unaffiliated third parties or publications, including 5-Star Wealth Manager, Advisory of the Year finalist by Senior Market Advisor, and Top of the $1 Million Roundtable, are in no way indicative of the advisor's future performance or any individual client's investment success. No award, ranking, or recognition should be construed as a current or past endorsement of Josh Jalinski or Wealth Quarterback LLC. Information regarding specific awards, rankings, or recognitions is available on the Wealth Quarterback website at www.jalinski.org. All investment strategies have the potential for profit or loss. Investment strategies such as asset allocation, diversification, or rebalancing do not assure or guarantee better performance and cannot eliminate the risk of investment losses. There are no guarantees that a portfolio employing these or any other strategy will outperform a portfolio that does not engage in such strategies. This broadcast should not be construed by any client or prospective client as a solicitation to effect or attempt to effect transactions in securities or the rendering of personalized investment advice. Due to various factors, including changing market conditions, the information discussed in this broadcast may no longer be reflective of current positions or recommendations. While information presented is believed to be factual and up to date, Josh Jalinski and Wealth Quarterback do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. The tax and estate planning information discussed is general in nature, is provided for informational purposes only, and should not be construed as legal or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Investment advisory services offered through Wealth Quarterback LLC.
WOR and WAXQ HD2 New York.
Unprecedented coverage for these unprecedented times. You can depend on us. We are the voice of New York. 710 WOR.
An iHeart radio station.
We've got 48 degrees at 11 o'clock. Good morning, I'm Paul DeCastro. The funeral service for Prince Philip is underway, led by the Archbishop of Canterbury.
We are here today in St. George's Chapel to commit into the hands of God the soul of his servant Prince Philip, Duke of Edinburgh.
The ceremonial service comes at Philip's request